We're just going to be looking at the chart and spotting some opportunities, nothing much. So GBP USD is the first one from Kamo. Euro USD from Nicholas. Recommendations. Okay, let us just get started. So there we go with GBP USD. Let me just try to open my chart. GBP USD. Here we are. So remember our principle, the principle of top-down analysis, whereby we always respect the opinion of the big guy. We always respect the opinion of the guy on the higher time frame, whereby our main goal and our main purpose, it is to spot the direction of strength. It is to spot the direction of the trend, so that we do not find ourselves opposing the bigger move, because that's where the market is flowing. So here what we can conclude is that it is obviously that the market is moving in an uptrend, meaning it is being led by the buyers. So if it is led by the buyers, it is advisable for us to take a buy signal. But then the question is, where and when should we buy? So that question is going to be answered by the lower time frames of when and where to buy. That's whereby we will go to our medium time frame, which is the 1 hour time frame, and that's where we spot our trend lines. That's where we spot our waves, meaning the impulsive and the corrective waves behavior. So here, for an example, where is my drawing tool? We can draw here and connect maybe this low here. Where is it? With that one, let us just extend it like this. So remember what I spoke about trend lines. That we are not doing line analysis. Why? Because price doesn't just respect lines. But price respect the decisions of the guys who are in the market. It respect the decisions of the players. So for us to see the decisions of the players, it is advisable for us to look in details when it comes to the action of the price or the structure of the price. For an example here, we can see that this is a corrective wave. Remember, for us to enter a position, we need to see a corrective wave. We cannot enter a position when we see the impulsive wave. Why? Because an impulsive wave is a sign that the bigger wave is already gone. So for you to buy, you need to look for an opportunity as the market is going down. For you to sell, you need to look for an opportunity as the market goes up, because if you are going to look for a selling opportunity here, it is likely that you are going to sell here. When the price is already long gone and it is about to reverse. Same thing applies to the buying opportunity. If you are going to look for a buying opportunity here, it is likely that you are going to buy here, not here. It is likely that you are going to buy here, not down here. Why? Because here it will only be visible when it is already late. I hope it is making sense. Let us stay away from chasing and let us be anticipators. Let us not participate. So here is a solution. We have a corrective wave. We are looking for a buying opportunity. Now we have to analyze this corrective wave. How do we analyze this corrective wave? Remember the principle of pattern within a pattern, whereby we look at the pattern inside the bigger picture. So for an example, let us go down to our last time frame, which is our 30-minute. Remember, we are using 3 time frames, the higher and the medium, and then the last time frame, the 30-minute. In the 30 minutes, that way we are looking in the pattern that is inside the bigger pattern, meaning we are now taking further look into this downward channel or this minor downtrend which is inside the corrective wave. Now, once we have spotted this downward move, we have to spot the momentum and the break of this pattern. Let this pattern which is inside the bigger pattern be broken. For an example, as for now, we cannot conclude much in terms of momentum, because it's like the momentum is still of the sellers, yet the buyers are still coming in. But when we see something like this, that's when it will be confirmed as a buy. For now, it is just a standby trade whereby we are waiting for a break of this downward channel here. Once it is broken and once the momentum is visible that it is now buyer's momentum, that's where we are ready to enter. So we are waiting for the pattern of lower lows and lower highs to be broken, and let us come with higher lows and higher highs, and then we are ready to go. You should make sure that you take this opportunity as early as possible, so that you do not buy when it is up there. So what you can do right now, it is to time this trade. Timing this trade, it is actually estimating the amount of time it will take for this pattern to be broken. For an example, you can see in the 30-minute, let me just use one hour for this illustration. You can see in the 1 hour that it will take about more than 7 candles or more than 10 candles to form a pattern break here. So you know that maybe you will check this trade after 10 hours to see if is it still a downward channel or this channel is broken. So once this channel is broken, you buy. You do not wait for your price to approach this line, because we are not doing line analysis whereby our price is bound to come and touch this line. So that's it about GBP USD. It's a buying trade, but we are waiting for a buying opportunity which is likely to occur more than 10 hours from the market open. So let us go to EUR USD. There we go with EUR USD. We are on our higher time frame, which is our maximum time frame. Oh, what am I doing? There we go. As we can see now, here is an interesting thing about this pair. Here's an interesting thing. You can see that now it's like, although it's still a market for the buyers, but there is something interesting which is in transition from one strength to another, meaning the trend, this bigger trend, which is an uptrend, it is now shifting from a stronger trend into becoming a weaker trend. So now remember how the market behaves. When we see strength shifting to weakness, we are about to see the strength of the other side, meaning the strength of the sellers. But it is not a sell yet, it is an uptrend. So here is what we are going to do. Remember, if it's an uptrend, we are always looking for the corrective wave, and once the corrective wave is there, we look for a buying opportunity. Here we can spot the corrective wave. And remember the principle of transition that we spoke about when earlier this year. I used to speak about it earlier this year, whereby I told you that there is no trade without a transition. There is no trade without a transition. So you do not open a trade when you do not see a transition. And transition, it is whereby the guys, let's say it is whereby buyers, they hand over to the sellers, or whereby sellers, they hand over to the buyers, meaning it is the deal. When you do not see the deal, when you do not see the negotiation taking place, you do not enter a trade. So here we can see the transition, which is the negotiation, whereby the market was moving down and now it is entering in a no direction zone, whereby this is the negotiation, whereby we are going to see either the buyers taking over, or we are going to see the guys continuing with their move. So here we have the transition. Now what happens? We go down to a lower time frame to just spot everything clear. Now here is what you should do. Here is what you should do. You can see that our downward pattern was broken here. Our downward pattern was broken down here. It was broken all the way here. So those who entered earlier without the transition, they are still on a buying signal, maybe with their stop loss down here, meaning it can happen that it was wiped, or those who put their stop loss with a breathing space, it is still active. But here is a tip that you should know. Excuse me. You should make sure that everything agrees with your buying trade. For an example, here there is no need for you to buy here right now. Instead, what you can do, you can mark this and say, I am buying when price is around this zone. Remember, I spoke last week, I spoke about the zones, which is territories, the seller's territory and the buyer's territory. So here now the price is in the seller's territory, close to the seller's territory. Here there is no need for you to buy closer to that zone, but it is advisable for you to buy closer to this zone. So if price doesn't come here, you rather buy it when it breaks this seller's territory. When this guy who've been selling here is defeated, then you can buy it. For an example, now what you can wait for, you can wait for something like a breakout here and then maybe a retest, you buy here. Or else you wait for price to come down and show you signs of turning up, and then you buy all the way down there. Remember, there's one thing that I want to illustrate. If it happens, as I said, that somebody used the theory of pattern break and bought here when the pattern was broken and bought here, remember that I told you that we do not close a trade because of our take profit and our stop loss. Remember, I told you that if you put your stop loss here, if you put your take profit up there, it doesn't mean that here that's where you're going to close your trade. It doesn't mean that here that's where you're going to close your trade. It necessarily means that if I am not in the market, if I'm not watching this trade, let the market close it for me when it reaches here. Let the market close it for me when it reaches up there. Meaning we close our trades depending on the action of the price, because we enter because of price action. So we close because of price action. For an example, here, if you bought here, you can see that price didn't go up. You can see that price have been busy playing games with you here. So if price is playing games with you like this, I told you two things, that it's either you close that trade or it's either you push your stop loss up as tight as possible. Why? Because here what we're expecting price to push up. So if it doesn't push up, it means that our analysis is questionable. So we cannot still remain the same and say it is going to go up. It is hoping for luck, which we do not need. So what you are supposed to do here, it was actually to take your stop loss down here and push it all the way up to this, below this minor support here. Or else you can just stay out of the trade. Because why? The trade is not working. You rather take these few cents and go out. Why? The trade is not working. So make sure that if the market doesn't do what you anticipated or something closer to what you analyzed, make sure that you reanalyze that trade, or you just change everything and stay away from that particular trade. So here we are waiting for the two things: a breakout of this seller's territory or price bouncing down close to this buyer's territory, and then we buy here or we buy a breakout up there. I hope we are still together. Let us just go to another pair. Let us go to another pair. What can I analyze here? Because people are not recommending anything, so let me just go with what I think. So let's go to USD card. There we are on the 4 hour. We can see on the 4 hour same thing is happening here, whereby it is still seller's market, but there is a transition of strength whereby the trend was strong, but now it is oops, I thought no one was supposed to speak. Okay, so here we go. We have a down move which is shifting to a weaker down move again. So me, when it comes to this trade, just looking this trade on the 4 hour, there is nothing I can do with this trade. There is nothing I can do with this trend currently, meaning there is no trade on USD card, on USD CHF. I mean, sorry about card, I just saw the C here. USD CHF, meaning there is no trade on USD CHF. Why? Because here, this thing that is happening here, it is actually not clear yet. It is not clear if it is now the buyer's market, because it would be the buyer's market once this pattern or this high is being broken. So still the high is not broken. So there is nothing to say yet. There is nothing to say yet. So such trades, just stay away from them and look for clear trading opportunities. Let's go to gold. There we are on gold. Excuse me. We are on the high time frame. So let me read this message. Gold. Okay, yeah, I'm opening gold. So here we are on gold. We are on a high time frame, our big boys time frame, whereby the bigger things happen and whereby we participate with those guys who are anticipating the market. So here we go. What we have here, we have no direction yet. We have no direction yet. We have something which is more like a range sort of a thing. We have this movement here. We have this movement here. I think I explained that previous webinar why I said that this was a range instead of a downtrend, because someone can see this low and say this low is lower than this one and this one is lower than this one. Why are you not saying it's a downtrend? It's still a range. Why? Because here we have this high which is higher than this one, and also this one which is still slightly higher than the previous one or in the same zone, meaning there is no decision yet. There is no decision yet. There is no decision yet. So if the market is neither moving up nor moving down, then it is kind of a ranging market. So here, if we have something like a ranging market, that's where we trade, we open or we have opportunity to open both buys and sells. So now let us just look at the 1 hour for a clear picture. So now we are expecting ourselves to see buying opportunities down here because it is buyer's territory. Oh my God. So what you have to do, you have to apply the same principle that you will apply when you are trading a trending market, as I was illustrating. For an example, you have to study the momentum inside the waves. Here we have in this case, because we want to buy, so we treat this as more like a corrective wave. So in this corrective wave, what you have here, it is more like two patterns, two shifts of patterns. Firstly, you had that downtrend, and then secondly, you had this downtrend which is at work right now. Meaning these are interesting news. Why? Because this is strength, but now strength is transitioning to weakness. So if strength is shifting to weakness, we are likely to see the opposing side taking over. We are likely to see the opposing side taking over. So what we have right now as traders in our minds, it is actually to wait for these resisting trend line of ours here to be broken, and we see what confirms an uptrend, which is higher lows and higher highs. Meaning here we are waiting for this line here to be broken, which is a resisting trend line. We are waiting for it to be broken here, and then we see some lows coming in which are higher than the previous ones, and then we confirm it as a buy. So that's how analysis should work. It shouldn't be something like I'm just opening the chart, wow, this is a buy, and I'm pressing the buying button. There should be time in the market, time when you are analyzing the market. There should be time where you as a trader, you have a notebook whereby you wrote all trades that you are going to take this week, depending on your analysis. Let not the market just throw at you trades and say buy this one and you just buy immediately. let it be you who says, let the market do this and I'm going to buy. If the market doesn't do this, I'm not buying. Don't allow the market just to throw at you trades and you enter trades because of panic, and at the end of the day you blame yourself. So let it not be like that. Another one, I'm opening Bitcoin. It's been dropping severely. So here we are on Bitcoin, which is also an interesting pair. Bitcoin USD. So what is happening here? I think I have to analyze the last one and then I open for questions. Here, what is happening here? The purpose of this webinar, it is not actually to give you guys maybe signals, but it is actually to just help you guys, or it is to help each other to understand how the analytical process goes, how we should deal with forecasting the market. Although I didn't cover some aspects, but I'm going to cover them right now. So here we go. We had this play up there, whereby the market was moving in a range, and all of a sudden it broke all the way down. So after breaking all the way down, now we have something interesting again. Remember, the starting point or the end of the buyers or of the sellers, it was here when these sellers were destroyed. These guys here, it is here when they were destroyed, meaning the dominion of these buyers, it started here. It didn't start here. It started here when the sellers were being destroyed. So if the dominion of the buyer started here, it means that this entire zone down below this dotted red line, this entire zone, it is the zone of these guys here, the buyers. This zone here, this territory here inside this two dotted line, it is the zone of the buyers. And then this territory here, it is the one of the sellers, meaning this is where you are going to make money. So now here is what is happening here. We can see that as the market was going down, strength is decreasing. Looking at the waves, you can see that we have a bigger wave here, this downward wave. I can't even draw. Jesus. We have a bigger wave and then a corrective, and then there comes a smaller wave. You see, meaning that the sellers were strong, but now they are weak. So what are we waiting for? We are waiting for buyers to push a bit up, and then we see something like this. Once we see something like this, it is a buy. No questions asked, it is a buy. Why? Because we are already on buyer's territory, and we have seen the sellers who took the price here by storm dying all the way down here, failing to breach over the zone of the buyers. So that's it. That's how the analysis process works. If the market doesn't do this, if it doesn't do something like this, it means that it is still a continuation of the sellers. So, but you have to make sure that you continue with the sellers when you see signs of strength. Signs of strength is whereby we see increase in momentum of the sellers, whereby an initial wave is, or I mean the present wave is bigger than the previous one, meaning something like this. It is a sign of increasing in strength, whereby this wave was smaller, but then this one is becoming bigger, and this one is becoming even more bigger. Then that's a sign of increasing in strength. For an example, here, when it comes to the buyers, we had a small impulsive wave and then a bigger impulsive wave. Then it was a sign of increase in strength. That's why these correctives here, it was good correctives to enter. Why? Because the market entered in this correction with increasing strength. So let us go to questions, but you can just type your questions and then I'll be attending something else that I want to highlight. So here is one important thing. Here is one significant thing that will actually add value into your trading. Okay, here we go. Okay, I think this is a signal that I posted on Telegram. Yeah, this is a signal that I posted on Telegram. I want just to highlight something. Let me start with this signal here. So I anticipated a sell here, but now the question is, what do I do when the market is behaving like this? You can see that here the market has been flowing smoothly all the way until this thing that is happening. So if you are a trader and maybe let's say you sold here according to the signal, the question is, what do I do here? So first things, what you need to know, because our target was all the way down to this region here, what you need to know is that you as a trader who sold here, there is no way that your stop loss is still up here, because the stop loss was here. There is no way that your stop loss was still up here. The possibilities are your stop loss should be somewhere around here as a mature trader, meaning in this case of a trade, you are already on the green side even if the trade doesn't work. So what should you do in this case? You can do two things. It's either you close it here, or else if maybe you are still anticipating a downward move, maybe you can still leave it here, but with your stop loss closer to here, not above your entry zone. That's what we call trailing your stop. Make sure that your stop doesn't remain at the same zone. Immediately when the price begins to move, let your stop loss also shift. So here, what you can do here, because you can see that here, let me just erase everything. Here, you can see that the sellers, they are no longer stronger. Why? Because of this wave, this buyer's wave. These buyers, they came in aggressively until they destroyed this high here, and now they bounced almost above it, meaning now there is joy in the side of the buyers. It's like the buyers are now getting stronger and the sellers, they are getting weaker. Why? Because they cannot defend their level here, they cannot defend their territory. So here, what I'm waiting for something like this. Why? Because the buyers are coming in, but anything can happen, as I said on the previous webinar, that we cannot really know what the market can do. Yeah, this is a wonderful question, Kamo. Do you consider news before entering a trade? Yeah, that was something that I really wanted to deal with. Okay, is there any price action candles when you do your analysis? Okay, when it comes to candles, guys, in my trading, I really eliminated candlestick analysis for simple reasons. I really eliminated it because of its insignificance. For an example, let me just show you. Let me just open this thing. How many reversal candles do you see here? A ton of them. It's a ton of them. So what I do actually, there is one video that I made about candlesticks on where should you look for candlesticks, You should make sure that you look for candlesticks only in the right level. For an example, you can see here, we have this doji here, this green one, which confirms an upward move. Okay, we also have another candle here, this red one, which is also a reversal candle. In this case, the market was pushing a bit down. So here we are low, we are on the low of the market. If you see this candle, it means that it's market going up. I hope you understand that. What I'm trying to give to you here is the fact that candlestick patterns, they occur everywhere. So if you are going to depend on them, it is going to really affect you. What you can do, it is better to depend on waves, meaning it is better to depend on highs and lows. Meaning, let my high be destroyed and then I will buy. Because candlestick, they have this thing of like fooling you in terms of looking at it in in a previous picture. For an example here, you can see that there is a reversal candle. Someone can say, if this reversal candle appeared, I was going to buy. But the reality is that you are not going to buy here when this candle played out, and I was not even going to buy, and I was not even going to say buy if I was analyzing this trade. Why? Because there is nothing which is agreeing with the buying side. Why? Because it was still seller's market. So there is no need to counteract the trend. There is no need to counter trend. So candles, they don't really work alone. They really don't work alone. So it is good for your knowledge. It is good for your knowledge. And there are strategies where you can apply candlestick patterns. For an example, when you are using pivot point strategies, when we are using harmonic patterns, when we are using Fibonacci, that's where you should apply candlestick, like just focusing on the patterns of the candles. But when it comes to price action, I prefer highs and lows instead of candles. Look at this range here. Almost 80% of these candles, they are reversal candles. So they'll be busy telling you different things, which is something that is confusing. Do you consider news before you entering a trade? Yeah, 100%. I consider news. There's something. It is actually something that I wanted to tell you, but thank you for reminding me. Thank you for reminding me, because we are running out of time and I would have not remembered it. So here is the thing. I consider news, and there was a time where I spoke about it, whereby I told you guys that when it comes to news, make sure that each and every day you open your investing.com app or any other calendar that you use. And before you enter your trade of USD USD or of GBP USD, make sure that you check if is there anything that is affecting my pair in terms of news. If there are news, there are two things that you can do. You can wait for the news to occur, for the event to occur, or you can enter your trade before the news occur. For an example, I'm not saying use that strategy, what is it, the 1 minute strategy or something. I mean entering the trade before, even 30 minutes before, even an hour before. Why? Because news, they behave like the market open. Meaning news, when they come in, they bring activity in the market. So for an example, what is a good pair that I can use? Let's say here we are anticipating a sell. Let's say here we are anticipating a sell. And on our sell, let's say 1 hour from now, there are going to be news. It is good for you to press your sell right now, so that when the news come, and I want to show you something. Let's say you enter the sell now, and the market just moves a bit down. As it moved a bit down, your stop loss is somewhere up here. So as it moves a bit down, and as the news are approaching, you have a space to take your stop loss down here. You have a space to take your stop loss down here. Why? Because the price will be here and you'll be already on profit, small profits. So already when the news they come, they already find you on the positive side. Rather than entering a second before, you are entering on a zero side. You are not on the positive, you are not on the negative. So if the news goes against you, it is high risk. Yet here, if the news goes on your favor, it is double benefit. So news, they are like market open. They bring activity in the market. So it is better to enter before or to really just wait and let the news occur. Also, on adding more positions to your trade, do you do it on high time frame or the smaller time frame? Kindly expatiate for me the correlation with DXY pairs that affect it. Oops. Okay, here is one thing. I'm already left with a few seconds. When it comes to scaling your trades, meaning adding more positions, you need to make sure that you do it on the lower time frame. Why? Because on the lower time frame, there is clarity in the structure of the market. Because scaling in your trades, it is more like adding into your risk. So for you to risk as less as possible, it is great, or it is good for you to see the bigger picture. For an example, if you sell here, you know that this is a lower time frame, your stop loss is going to be here, but maybe somewhere here. Let me not put it fast, somewhere here. But if you are on a bigger picture, you are going to be putting your stop loss in a way which is far from that one. So the lower time frame, it enables you to look at the price in an elaborated way. So guys, I don't know, I no longer have time